Hello guys, welcome back to my channel. It's me again, Francis Labang, the remote office mate. And Merry Christmas to everyone. From the previous video, we already transferred the fixed asset from land, this one from land to accumulated depreciation building. And all of this from here to cash to here, we already transferred it to QuickBooks, as you can see here. As you can see here, the cash, account receivable, and then the other current asset, the inventory, the fixed asset, and for the last one is the investment for van. This one. This is our topic for today's video, investment in van. This will be a very short video. So let's start. Let's go to chart of account. Click new. Investment in van, it can be current or other current asset. It depends on how many years or the terms of the investment. For this, let's check in the computation or the table of the investment in bond. I have here the computation tab, this one. As you can see, it started in 2019. So this is other long-term asset, but it will end in 2022 next year. So we will put this on the current asset because it will due next year. But if we start it here in 2029, we will categorize this other long-term asset. Now let's go here, asset. Now let's check first. Let's check first here in the other current asset. And here, let's check. Yeah, there's an investment. Investment, we can use this one, other investment other. Let's go down further. Yeah, we can use this one. And let's try another. Let's try this one, other asset. Click here. There's no investment here. So we have no choice but to use the, let's check if there's still, we can find an investment here. So we don't have any choice but to use this one, other current asset. And here we will use this one, investment others. Then here, let's go back, copy this one, paste it here, starting date, then other date, then this one, copy paste the date and the amount, this one, paste it here. So save. Let's first go to investment. We will look for it, investment in bond, this one. And then we will change this one to owner's capital, this one. Then save. Now let's go to balance sheet. Let's refresh this one. Then we will look for that investment in bond. It is other current asset. There you go. This one. Let's make it clear. This one, investment in bond, we have it here. It is in the other current asset. So since this is a very short video, we will proceed further from the cleanup. This one here, cleanup. This entry. Let's check first what should be the balance of investment in bond as of October 2021. Let's go back to computation tab. This one. Here we go. The balance here is this one. This one is as of here. As of March 15, 2020. So, and the balance should be before October 2021. This one. This should be the balance. So we should make a journal entry to make the balance 985,000, and the amount will be the total of this one. It's 13,527,000.15. That will be the amount. So our entry will be investment in bond and retaining earning. This one. I already prepared the journal entry for this. This one. The first entry, I dated it October 1, 2021, is an adjusting entry to correct the balance of investment in bond as of October 2021. And the second entry is on October 15, is a regular amortization entry. You can see here, this one, October 15. These are the amounts of journal entry for amortizations. So let's do a journal entry for this. Let's go here, click here, then journal entry. Then we will date this 1 October 1. October 1. Why October 1? Because I want to know the exact amount of investment in bond before using the QuickBook. So this is the first entry, the updating the amount of investment in bond. This one. Investment in bonds. Then here, retaining earning instead of interest income, because the book was already closed. The manual bookkeeping is already closed. So retaining earning, we will credit this to retaining earning. And the amount, this one. Here in the description, we will type adjusting entry. Adjusting entry, we'll copy this one and paste it here. Then let's check. And let's save and close this one. There you go. Let's check. Let's refresh this one and we will take note the balance is 972. Let's go down. There you go. And let's check here in the computation. There you go. They are now equal. So now let's go to 15, October 15. We will record it October 15. Let's copy this one. October 15. The entry, this one. This amount should be reflected in the bank statement. However, I don't have the bank statement now, so let's just assume that this amount reflected in the bank statement as well as as well as as well as this one. All of this amount are reflected in the bank statement of Land Bank. Let's just assume it. For now, I don't have the bank statement for it. Let's go back. This amount, it's a debit. Then investment in bond, the amount, and the retaining earning. Retaining earning. Retaining earning. So that's it. So let's save this one. So save and close. If we check here in the balance sheet, this will not this amount will not change because we already recorded it in on October. It will change because the date is December 30, 2021. Let's refresh this one. Let's go down. There you go. Let's go to the computation. The balance is this one. Now we want to know the balance of September or October 1. Go here and we will make this monthly and we will date this September 30. Then this one is October 31. Then run. There you go. And we will look for the investment in bond. There you go. You can see the balance is still in October in 2020, March 15, this one. And here the balance is October 2021. This amount is correct and this amount is also correct, but this amount is as of October March 15, 2020. So I want the balance here should be this one. Should be this one. So let's go back to journal entry and edit journal entry. Then this one, October 1. And I will date this September 29. Save and close. Let's refresh this one. Let's go down. Let's check. Yes, this one 185 6. Yes, correct. And the balance 9 to, yeah, we're good. And let's go to trial balance. And as you can see here in the balance sheet, it has 2 months, which is September and October. And for September, I intentionally dated it September so that I can still know the opening balance or the beginning balance before using the QuickBook. So that's it for today's video. If you learned something from it, kindly like the video, subscribe to my channel, share the video to your friends who wants to learn bookkeeping, especially QuickBook, and hit the bell notification so that you get notified whenever I upload new videos. So for our next video, it will be liability. So thanks for watching and see you in the next video. Goodbye.